What if you could invest like a billionaire? Imagine having Ray Dalio's playbook for 2025. Ready to discover his top 5 investment secrets? Let's dive in. Hey there, investors. Welcome back to the channel. I'm thrilled you're here because today we're unpacking the wisdom of Ray Dalio, one of the greatest minds in finance. His principles have guided billions in investments, and they can guide you too. Whether you're new to investing or a seasoned pro, these 5 insights for 2025 will help you navigate the markets with confidence. So, grab a notebook and let's learn from the master himself. Diversify like your future depends on it. Ray Dalio's first principle is diversification, your ultimate financial safety net. Imagine your money as a garden. If you plant only one type of seed, a single storm could wipe it out. But if you grow different plants, stocks, bonds, real estate, commodities like gold, some will thrive even when others struggle. In 2025, markets could be wild. Inflation might spike, tech stocks could dip, or global events could shake things up. Diversification spreads your risk, so no single loss destroys you. Dalio once said, "You can't predict the future, but you can prepare for it." This means building a portfolio that can weather any storm. For example, let's say you invest $10,000. Instead of putting it all in one tech stock like a hot AI company, split it. Maybe $4,000 in a broad stock market ETF, $3,000 in government bonds, $2,000 in a real estate investment trust, and $1,000 in gold. If tech crashes, your bonds or real estate might hold steady or even grow. This approach isn't about avoiding risk, it's about managing it smartly. In 2025, diversification could mean the difference between panic and peace of mind. Start small if you're new. Open a brokerage account, pick a low-cost ETF and add some bonds. Over time, explore commodities or international markets. The key is balance. Don't chase one hot trend or bet everything on a single stock tip from a friend. Dalio's success at Bridgewater Associates comes from this principle. His firm invests in hundreds of assets worldwide, never relying on one market or sector. You can do the same on a smaller scale. Check your portfolio today. Are you too heavy in one area? Maybe you're all in on crypto or tech. If so, rebalance. Add assets that don't move in lockstep with each other. For instance, when stocks fall, bonds often rise. Gold can shine. During inflation, real estate might hold value in a recession. In 2025, global tensions or policy shifts could hit certain sectors hard. A diversified portfolio acts like a lifeboat, keeping you afloat. Dalio's advice is simple. Spread your bets, but do it thoughtfully. Research each asset class, plus consider emerging markets for sheer size, bonds, and real estate for a balanced approach in 2025. Stay calm, think long-term, and let diversification be your foundation. It's a strategy that builds wealth and protects it. Understand the economic machine. Ray Dalio sees the economy as a machine with predictable cycles: growth, recession, recovery. To invest wisely in 2025, you need to understand how it works. Picture the economy as a game with rules you can learn. Interest rates, inflation, debt levels, and global events drive markets. In 2025, we might see higher rates or trade tensions. Knowing these patterns helps you make smarter choices. Dalio once said, "The economy has rules. Master them to win." For example, if central banks raise interest rates, bond prices might fall, but cash or short-term bonds could gain value. Study economic indicators like GDP, growth, unemployment rates, or consumer spending. In 2025, energy prices or supply chain issues could sway markets. By understanding these forces, you can position your investments to benefit. Start with free resources, economic reports, Federal Reserve updates, or trusted analysts on platforms like X. Dalio's firm, Bridgewater, thrives by analyzing these cycles. You can too. For instance, during a recession, defensive stocks like utilities or consumer staples might outperform riskier tech stocks. In 2025, watch for signs of slowing growth or rising debt. Historical data shows cycles repeat every 5 to 10 years. The 2008 crash taught us that over-leveraged markets can collapse fast. Today, global debt is high, $300 trillion some estimate. If rates rise, highly indebted companies or countries could struggle, affecting stocks or bonds. Check reliable sources like Bloomberg or the Financial Times for updates. Dalio's approach is about seeing the big picture. Are central banks tightening? Is inflation sticky? These affect your portfolio. For example, in 2022, when inflation hit 8%, cash and tips, Treasury inflation-protected securities, outperformed many stocks. In 2025, similar patterns could emerge. Learn to spot them. Read Dalio's book, Principles, or watch his YouTube talks. Follow analysts who break down complex data simply. Knowledge gives you an edge. Don't guess, study. Check economic calendars for key releases like CPI or Fed announcements. In 2025, understanding the machine means knowing when to pivot, maybe from growth stocks to value stocks or cash. Stay curious, stay informed, and you'll invest with confidence. Embrace reality, not hype. Dalio's third principle is to face reality, not chase hype. Markets love to overhype trends. Think crypto in 2021 or dot-com stocks in 1999. In 2025, AI stocks, green energy, or new tech might be the buzz. But don't follow the crowd blindly. Dalio says, truth is the foundation of success. Check fundamentals. Does the company make profits? Is its growth sustainable? For example, a hot AI stock might jump 50% in a year, but if its price-to-earnings ratio is 100 with no profits, it's risky. In 2025, social media on platforms like X might push trendy investments. Ignore the noise. Look at revenue, debt, and cash flow. Take Tesla in 2020. Its stock soared, but early on, profits were thin, signaling caution. In 2025, maybe fusion energy or quantum computing stocks will trend. Before buying, check their balance sheets. Are they burning cash? Are sales growing? Use tools like Yahoo Finance or Morningstar for data. Dalio's Bridgewater avoids bubbles by sticking to reality. You can too. For instance, in 2021, meme stocks like GameStop surged on hype, then crashed. Solid companies like Microsoft, with steady earnings, held firm. In 2025, green energy might boom, but pick firms with real revenue, not promises. Avoid FOMO, fear of missing out. Dalio's method is disciplined. Check SEC filings or earnings calls. If a sector's buzzing on X but lacks substance, pause. Reality means buying what's proven, not what's popular. In 2025, stick to fundamentals: cash flow, low debt, strong margins. That's how you build wealth that lasts. Balance risk and reward. Dalio's fourth lesson is about balancing risk and reward. Every investment has risks, but the goal isn't to avoid them. It's to manage them. In 2025, safe assets like Treasury bonds might yield 2 to 3%, while volatile stocks could offer 10% or more but with bigger swings. Dalio once said, "Success isn't avoiding risk, it's taking smart risks." For example, a portfolio with 60% S&P 500 ETFs and 40% bonds balances growth and stability. In 2025, high-risk bets like small-cap tech or emerging markets might tempt you. But know your limits. Are you okay with 20% drops for a shot at 15% gains? Test your strategy with small investments first. Dalio's Bridgewater uses complex models to optimize returns per unit of risk. You can simplify this. Maybe put 70% in stable assets, index funds, blue-chip stocks, and 30% in riskier areas like biotech or international ETFs. In 2025, rising rates or geopolitical shocks could make risk management crucial. For instance, in 2022, bonds fell when rates rose, but balanced portfolios with cash or dividend stocks stayed resilient. Know your risk tolerance. Can you handle volatility, or do you need steady income? Use tools like risk calculators from Vanguard or Fidelity. Dalio's approach is about finding the sweet spot, decent returns without sleepless nights. In 2025, avoid going all in on one idea, like crypto in 2021. Spread your bets, maybe 10% in emerging markets, 20% in bonds, 50% in broad equities, and 20% in cash or gold. Check your portfolio's volatility with apps like Portfolio Visualizer. If markets wobble, a balanced mix keeps you steady. Dalio's wisdom? Plan for the long haul, not quick wins. Stay disciplined, stay long-term. Dalio's final principle is discipline, sticking to your plan despite market chaos. Emotions can wreck your investments. In 2025, volatility might spike, maybe from policy shifts or global events. Don't panic when stocks drop 10% or chase a 50% crypto surge. Dalio's firm, Bridgewater, succeeds by thinking decades ahead. He said, "Stay calm through the storm, and you'll come out stronger." For example, in 2020, the S&P 500 crashed 30%, then recovered. Those who sold lost big, those who held won. In 2025, set clear goals, maybe 7% annual returns over 10 years. Invest regularly in an index fund like VOO, even during dips. Time in the market beats timing the market. Dalio's approach avoids knee-jerk moves. If you're saving for retirement, automate contributions to a 401k or IRA. In 2025, headlines might scream crash or boom. Ignore them. Check your plan monthly, not daily. For instance, dollar cost averaging into an ETF smooths out volatility. If markets tank, keep investing. Prices are lower, so you buy more shares. Dalio's discipline means saying no to get-rich-quick schemes. In 2021, many chased NFTs, then lost fortunes. Stick to boring proven assets, dividend stocks, broad ETFs, or real estate funds. Use apps like Wealthfront to automate your strategy. In 2025, volatility is normal. Stay focused on your goals, not market noise. Discipline builds wealth that endures. There you have it. Ray Dalio's top 5 investment insights for 2025. Diversify smartly. Understand the economy. Stick to reality. Balance risks. And stay disciplined. These principles aren't just for billionaires. They're for you. Take one step today. Maybe review your portfolio or read up on economic trends. Small actions lead to big wins. If you found this helpful, hit that like button and subscribe for more investing wisdom. Drop a comment. What's your top investment for 2025? Let's keep learning together. See you in the next video.